'Tis the season for Black Friday deals, and they're quite abundant, but the shoppers aren't there. Why? Black Friday back in the day was kind of used as an indicator to see where retail companies are, as well as consumers for analysts to see if they're essentially going to get their bonuses, because it's a kind of a determinant of the current financial health of the consumers. And if you guys didn't think consumers were a big deal, they're about 30% of the US GDP. And it's not me saying this. This was what Peter Lynch said way back in the day, and he ran the Magellan Fund. Now, I'm not a firm believer that these analysts and any of these execs are really going to get their Christmas bonuses. If they are, they're going to be very minuscule. But that's just my opinion, and I'm going to show you a few things that I went through and let you be the judge. I always ask a prelim question first. So the prelim question for this time around is, are you subscribed? Because if you're not, you should consider subscribing. If not, you should go convince someone else to subscribe as well. I'm trying to get to 1,000 subscribers. The first question I typically ask is, are people making more money than they were before? And currently, as it stands, the answer is no. Now, as you may or may not know, that's also kind of lag data. It's only released like annually, and we haven't had an update for 2022 yet. However, let's go look at some other correlating data. So then the next question I ask is, how much money do they have in their bank accounts, their savings, their retirement funds, and so forth? So you're currently looking at the M1, which can be construed as people's checking accounts, bank accounts, savings, etc., etc. Now you guys can see this obvious huge spike that happened here, and that could be basically explained by essentially the COVID checks that were cut. And we seem to have peaked out right at the beginning, around the beginning of this year, and then we started to tail off. And the only thing I can explain about that is probably inflation and so forth. But if we look at the M2, which is essentially their IRAs, or retirement funds, and so forth, same story. Now, when I said inflation, allow me to elaborate. It's basically because everything's costing a lot more now, and people's incomes are starting to draw down. They're starting to draw on their savings as well as some of their retirement incomes. And that's essentially where this extra money is kind of coming from. But why are they still not spending, though? Because this next graph is kind of confusing. Now, the counter argument to this would be people's disposable incomes are going up. That means that even though they're making less, they still have more money to spend and do whatever they want, right? And to that effect, I'd say you're forgetting about inflation, and that we have not seen the opposite sister end of this thing called deflation. Because in deflationary periods, your dollar strength would actually rise, meaning that things would actually cost less for you, and the incomes going down would actually make more sense because your dollar can actually take you a lot further than, what your dollar can take you now, right? And honestly, you only see deflation when you start seeing things like, gas prices not be at $6 plus a gallon, energy prices not be $1,000+ food. You're actually able to feed yourself with actual good food and actually have good choices and so forth. But I digress. To add another layer of nuance to that as well, why would people say that, oh, personal income's up, but, real household incomes are down and so forth or whatever, right? And the answer to that is because credit. See, we are at an all-time high in terms of our credit owned and securitized. See, if you didn't know this before, and I just learned this recently too, and I had to re-reference and ask someone about this. Thank you, Rita. But the credit is actually added on to your disposable income. So even though you're making a lot less money, because you have the ability to spend more money, your disposable income is actually looking like it's going up. The ability to spend more does not mean the ability to afford it or even keep it. Nothing's worse than having little Timmy needing to choose between their Lego sets and the heating bill. But I guess we're all learning what our grandparents had to learn, which was sacrifices. Do you really have to get that thing right now because there's a Black Friday deal or, some sort of sale going on? I don't know. That's kind of a you question. But what I'm seeing in the retail sector, at least, is that I think that people are going to lower their expectations at the very least, because retail sales right now do not look so good. I don't know about the online sector, that might kick up, but what I am potentially seeing is currently mixed, because obviously, like I outlined earlier, I don't know if the consumers even have the money to afford the things that they're buying, and even with their credit lines, I'm not sure if they can even afford it, because I would assume it's being used for food, energy, housing, and so forth, or whatever types of payments they have ongoing that are revolving. And that is my rationalization on why nobody's at these stores for their Black Friday sales. I heard, inklings of weather, but if you look on YouTube for all the Black Friday sales previously with the, manias and stuff like that, a little cold ain't going to stop people from getting deals, especially on stuff that they really want. But, that's just my opinion. Let me know what you guys think down below. Leave me a comment, subscribe, like the video. If you already subscribed, find someone else, convince them to subscribe for me. But yeah, that's all I have to say for now. And just remember, just because you're a day trader doesn't mean you have to trade every single day.